What is going on, guys? Welcome back to another brand new video. Today we're going to talk about market structure, the thing that I would say 99% of the beginners are not familiar with, and the importance of market structure, of course. And I'm also going to explain the method that I use to trade. And I used to trade forex with the same concepts. I trade crypto now with the same concepts, and how easy and simple they are. Once you get the grip of them, once you start back testing them, once you start looking at the market from a distance, from afar, from a zoomed out perspective, you will see the market is doing these things over and over and over again, and all the time frame and across all the market. No matter what you are trading, I promise you, I guarantee you that it is happening across all the pairs, all the markets, and all time frames. So the three simple rules that I follow for my trading, even today, to this day, whenever I trade, whenever I enter for a buy. Now, usually this works in the crypto market. This works more in a buying scenario, right? At the end of a downtrend. So I'm buying more than I'm selling. Now, of course, the forex market, naturally being a bigger, much bigger market, these opportunities were equally presented for both buying and selling opportunities, right? But unfortunately, in the crypto market, it's only happening whenever there is a downtrend, and most of the time, it's probably going to happen for a buying scenario. So I'm going to show you guys these three simple rules, and I'll show you guys an example. If I can show you guys an example for a sell, I will show you guys for a sell as well. But for the buy, I will show you guys one of the most recent examples that happened on Bitcoin. So the number one thing is, and the best thing about these rules and this method is that any beginner can also understand. Very simple, very easy, and you can also backtest this, and hopefully you can also apply your own trading. So the very first thing that you should look for whenever you open a chart, even as a beginner, what do? You start marking your support, right? And you start marking your resistance, right? Simple. So the first thing that you do what you do is basically you are looking for liquidity. What is liquidity? Liquidity is basically equal highs. Let's say equal highs, right? And equal lows. If you want to understand better, liquidity is basically money that is sitting above a resistance and below a support. Now, this money is not physically there, it is virtually there, and it is sitting over there in the form of buying and sell limits. So above a resistance, there's going to be buying limits. So people are going to be thinking, beginners or new traders, they're going to be thinking that once the market breaks above this resistance, I will place a buy limit. I will place a buy limit for the future, that whenever the market breaks, my buy limit will automatically get triggered and I will automatically be in a buying trade, in a buying position. And so the same thing will be happening at the bottom. Below is support. People are going to be thinking that the support is going to be broken soon. So they will place a sell limit for the future. So once the market breaks below, their sell limits, sell orders will automatically get triggered. They are automatically in a selling position, in a selling trade. And then in their head, the market is supposed to continue lower. Unfortunately, this doesn't happen. Unfortunately for us, we are already familiar with this phenomena. So what we are going to do is we are going to be patient. We're going to sit back, relax, let the market do everything, and then we'll wait for a retest. We'll wait for a chance when the market comes back and gives us a chance to enter the market. So over here, the very first rule is that market should be creating liquidity. Liquidity in this case that I am looking for in a downtrend is at the bottom. I'm going to be looking for a support. I can show you guys much better on a 1 hour time frame. These equal lows are much clearer. There you go. So I'm going to be looking for a liquidity. The second rule is that liquidity grab, right? The liquidity must be grabbed, meaning there should be a fake out, right? There should be a fake out, a fake breakout. Sorry, I meant to say fake breakout. So there must be a fake breakout, which we call a liquidity grab. This liquidity that is under these lows is being grabbed, the orders are being activated. And what happens? The second part of the second rule, impulsive move in the opposite direction of the liquidity grab. So for example, liquidity is being grabbed at the bottom. Okay, so where's the opposite direction? Above, right? To the upside. So the market, after grabbing the liquidity, after grabbing all these orders, must reverse impulsive in an impulsive manner. Impulsive means impulsive, very fast, very quick, right? So after grabbing a liquidity, it should reverse in the opposite direction very fast. And you guys can see over here, let me zoom in to show you guys much better, in a much clearer. You guys can see, right? All green candles. And instead of this being the new support and now being a resistance, that doesn't happen. It gets broken, it becomes a support again, and is being respected as a support again, right? So we know this was a fake breakout. Okay, so the second rule has been fulfilled, is being fulfilled right now. And then the third thing is the break of market structure. I should have written break of most recent market structure. What is market structure? Support and resistance, right? This is market structure. In other words, it is equal highs and equal lows. Simple as that. So in a buying scenario, in a downtrend, the most recent market structure are going to be these equal highs. If these equal highs get broken, meaning the market comes back and creates new highs, higher than these highs, then the previous market structure has been broken. There's a break in the market structure. New market structure has been created. And so now we are not 100% still. You know, the market can do whatever it wants. But 99% sure that this was a fake breakout. And now, when the market has done everything, I told you guys, sit back, relax, let the market do everything. Now the market has done everything. It has fulfilled all three rules of mine that I look for whenever I want to enter for a trade. Now we are going to wait for the market to come back to that fake, where the fake breakout started. So it started at these red candles. Let me zoom in. It started at this red candle right here. This teeny tiny little candle. You can see selling pressure, selling pressure. Only one green candle, right? Selling pressure, selling pressure. This is where it started. We are going to wait for the market to come back. Now, there are, when you want to enter, two possibilities. One, you enter right where the fake breakout started. Or if you want to enter in a much better position, you enter at the half of that selling move or the fake breakout. Half of that. So you guys can see this is a much better position. Why? Because even if the market continues lower, your stop loss gets hit. By the way, your stop loss is going to be right below this last red candle's low. Okay? Because if it breaks below this, then this is invalid. It was a real fake breakout. Okay? So even in this case, when you're entering at the half, you can see even if your stop loss gets hit, it's not that big of a loss. So if the stop loss gets hit and you entered here, your stop loss is going to be a bigger stop loss. So you would take a bigger loss compared to taking a loss over here, entering at the half. Okay, so one opportunity is right here. But I would say that whenever there's a wick, okay, I always say this in my videos. Whenever there's a huge wick, for example, this one, these little tiny wicks over here, the market is supposed to retest that only once. But if it's a huge wick, chances are it's going to fill half of the wick once, then come back again, fill 75-80% of the wick, and then reverse again. So there's basically two chances. Not all the time. I'm not saying this all the time, okay? Do not mark my words. And this is not a financial advice. I'm not telling you guys what to do with your money. I am telling you guys, I'm showing you guys what I do, okay? So you guys can see most recently there was another opportunity for a buying scenario at a much lower position, at a much lower price. Okay. So over here you would be entering at 30,700. Over here 29,000. Okay. So, and the thing is, one of the most other important things is that now you have entered, where would you like to exit? I like to exit at the most recent point of liquidity. So if I'm entering here, this is where I would sell all of my Bitcoin. Either that, or I would like to sell the amount of money that I invested, and the rest of it I will just hold, right? I will hold the rest of it, and my stop loss would still be here if I'm trading on a MetaTrader. If I'm trading spot trading, I'll just hold my Bitcoin. Simple as that for the future. And then if you are patient enough, you are holding your Bitcoin, this would be the next point of liquidity. This is where the next equal highs are. This would be a very good point for you to sell, or for me to sell the rest of my Bitcoin. Simple as that. Let me show you guys if I can find an example for a sell. Okay, so right here at the top of a Bitcoin, when it reached almost 65,000 a couple of months ago, we can see that the market started creating. This is on the 4-hour time frame, by the way. The previous example was on the 1 hour. So you guys can see equal highs, relative equal highs. And then there is a fake breakout starting right here, all green candles. And then there's a fake. Now, one of the other things that I would like to mention here, it's much better if it's a simple one single candle. Okay. By the way, you guys can see this wick on the 1 hour time frame, so you guys can see it now. There is a wick, like I said. Uh, First, it got filled like almost 50% and then 70 to 80%. This happens all the time. Even this week, it got filled over here 50%, then 70, 80%, and then again. So this happens all the time. You guys can see whenever there's a huge wick, this happens most of the time. So it's much better. It's going to be a much guaranteed trade if the liquidity grab happens by one single candle. If there are two candles equal in size, body size, or wick, chances are it's a weak trade. It's a weak setup. But still, nonetheless, if these three criteria are still being fulfilled, it is still there is a very high chance it is going to be a profitable trade. But I prefer single candled liquidity grabs. So over here, you guys can see liquidity fake breakout happened. First rule was that there is liquidity, yes, equal highs. And then a fake breakout happened, you guys can see. And then after the breakout, the liquidity grab very fast, impulsive move in the opposite direction. So to the downside. And new market structure was created, new equal lows, right? These lows got broken. Most recent, these lows, the most recent ones, these got broken, new market structure got created. So what we are going to look for is now that the market comes back to that fake breakout, that liquidity grab, and that happens over here in the future, right? So this is where, let's say, the liquidity grab started. Now over here, you can see the market came so close, right? So close. I manually just enter, because if you put a limit, chances are this is going to happen. And this has happened to me way too many times in forex. My limits would not get triggered, because in order for my limits to get triggered, this must come above, right, a little bit, and then go down. So anybody who places limits knows that the market either needs to go higher for a sell limit and lower for a buy limit. So simple as that. If I was holding Bitcoin in a spot trade, it comes back, I will sell my Bitcoin over here. Simple as that. Unfortunately, nobody knows the future, so I couldn't sell over here, right? I just thought it was going to 100,000 like everybody was saying. When it reached close to 50, 65,000, I thought it was going to 100,000. But if you're trading using this method, you can see that you have to be patient. Yes, the market will come back to that area, and you will get a chance to still sell your crypto physically if you're holding it at a much better price, still at a much profitable price. And so this is what I meant. But this is in crypto market, you are going to get more buying opportunities than you are going to get selling opportunities. Now, if I'm still trading on MetaTrader with a broker, for example, IC markets like I used to, I would just enter for sell over here and still make a lot of profit, right? And trading on MetaTrader is fine with brokers that do not charge you commission on crypto trades. So for example, if you are trading on IC markets using MetaTrader 4 or 5, they do not charge you commission. So basically, you're not paying any interest. So if you're a Muslim, you can still trade on MetaTrader 5, MetaTrader 4 using any broker that does not charge you commission on any crypto trade. Okay. So please make sure you first know that they're charging commissions or not on crypto trade. So simple as that, guys. These three rules. So after watching this video, no matter what market you trade on, go to your charts, apply these three simple rules. You just have to be patient. Remember, patience is the hardest part. Okay, entering a trade is just like this. It takes 1 second, right? But being patient for that one trade that you have so much confidence in, that you have more confidence in than the other trade setups, right? Being patient for that one trade is going to be very, very hard, right? And it's going to take a lot of time and practice for you to be that patient. Once you start losing money, you are going to realize that being patient is better than being sorry. That is what I always say to my fellow traders, and that is what I would like to say to you as well. So if you are watching this video, I hope you learned something new. Please let me know in the comments if you have any questions, and please do back test this. Please apply this onto your own charts. Don't take my word for it. See for yourself and let me know in the comments how it goes for you guys. I'll see you guys in the next video. Peace.